And just like that, I had the biggest red day of the year. But before this, I also had the longest green streak with the biggest green day. And those were the worst bad jokes of the year. Just kidding, they're not the worst because it's all going downhill from here. Okay, I just had to use up these bad jokes while I still can. I feel like I can only use them for the first week of the trading year. So yesterday I had a pretty decent day. QS was the biggest trade for me. I saw the stock, having the first green day. You can see here on the daily chart, it went red to green. I did have a starter. I cut it a little bit too quick, literally right at the bottom. But starter size, I want to be wrong on starter, and that's why I don't hesitate to go back in once I see that it's holding this $50 area. Also the red to green line, right? The psychological area. Once the stock stays green, I started going in and re-added into it and was selling into the breakout, and even had a pretty aggressive ad up here around 54.50s, and the stock took off to around 57, so I'm selling on the way up. I did have some re-ads and then stopped out on the break even, but this is a pretty big move. Pretty much started from $51 all the way to $57, so I caught some pretty nice upside on this stock QS on the breakout move. So with these larger cap stocks, that's where I'm really comfortable buying the breakout, especially when the momentum is really strong. But on the small caps, I would not do the same thing. The second biggest trade on the day was PETK. So this one, the locates were really expensive, but I did assess it and saying that, okay, I'll just locate smaller shares and try to let it ride out a lot longer. So even though I did have smaller share sizes, these things they move like $2-3 on the downside too. So I started in just small size pre-market around the 1350s area. I re-added on the spikes into the, you can see 1250, 13s, covered some and re-added on these failed spikes, and the stock just dumped to around 1050s, $10, and then had a re-hit. But pretty clean trade, and the reason it's really clean, it's because I'm aware of the locate costs. I think this thing was like 23 cents per share. So, if you do the math on 1,000 shares, let's say 1,000, 2,000 shares, that's about like $400, $500. So you definitely want to, so if I do locate those share sizes, I definitely want to make sure I get a lot more than just 20 cents. And this thing gave us about $2-3 move to the downside. So that was decent. It was well worth the locate cost, as long as the entries was closer to the $14 daily resistance levels. And final trade from yesterday was NCTY. I think they joined the Bitcoin hype or something like that. They're joining the Bitcoin bandwagon, which is exactly what happened in 2017 when all these stocks out of nowhere just put Bitcoin and blockchain in their headlines, and all these stocks that came literally are worth like $2-3 will go 100-200% on the day. The hype that's going on right now really do remind me of 2017, and hopefully we get even more tickers like this actually. But NCTY, I was mostly, I was on the short side, had a really small starter, and I'm adding on the way up, and most of my size were used around the 950, 980s area. That gave me an average of 940s after all the ads. Ended up just being a scalp because I didn't stay till the $8 mark, but I covered all out around the 880s, 890s area. So small scalp on NCTY for me. So those trades were from yesterday, and they were a lot cleaner. I noticed that they were a lot more follow through yesterday, at least for me. Today is a red day, a small red day. I took a lot of these starters. If you look at NEO, this is a stock I traded. I did think that once we are holding about $54, that we're gonna get a lot cleaner move to the upside to perhaps 55, 56s, and it just never formed the uptrend that I was looking for. If you look at a 2-minute chart, got chopped around, and then I was longing starter. I cut it pretty quickly, and all of these are starter sizes. I'm really comfortable risking some wider range. So if let's say your full size is 1,000 shares, your starter will be 100 share. So that's how I start into these positions. I don't want to get too big, to full size or even half size until the stock starts working in my direction. Until NEO starts trending to the upside. That's how I trade. So I don't mind taking these paper cuts, but it's just still a little bit frustrating. I never made the big move I was looking for. So NEO turned out to be the loser of the day, and there were a couple other smaller trades, but unfortunately I was focused on NEO and also QS. That one that I traded yesterday also chopped me up. So tons of these paper cuts. Tesla, I did trade it smaller size because I was trying to focus on the cheaper names. Tesla, $700 stock. It takes up a lot of buying power. So I had a couple of small scalp here. I had a long here, sold some, but re-added into it, thinking that we're gonna break out above pre-market highs. And I do regret selling too much of it over here. I had a tiny scalp up here as well, and the stock just taking off all the way to $800. I think today it's up at all-time highs from the upgrade from, I think, Morgan Stanley to $810. I mean, Tesla, it's possible, right? This thing looks like it's gonna go to 800 and I don't know, maybe even higher. But that's my small trade on Tesla. The other stock I also scalped a little bit for a small trade. CBAT. This one I took a loss first though. If you look at, I was scaling in short on the $7 move. I did cover some and re-added back, but once it breaks out above $7, that's when I cut it. And the stock spiked to 730. And then immediately rejected. So unfortunately for this stock, I had to take a loss first. I took a loss on full size on a short position, and I did go back in after seeing this huge rejection candle. Go back in, risking the same $697 area, scaled in around 680s, added some more 676. But unfortunately, my average wasn't as good as the first trade, and that's what caused the loss earlier. And then we got a very nice dip for 640s, and then I see that it's holding VWAP and it just got out. So this one turned out to be a small winner on the secondary trade, but unfortunately I did take a loss early right here around the 690s. I don't regret this because at the time it did seem really strong. It did seem like they want to try to squeeze even more and break out to above $7. You can see they tried it again over here. So this 720, 710s, a lot of selling up here. And we're breaking down now. But I still think I managed my risk well. Because what if it did go to $7? And, on a daily, above 7s, it can go to $7.50 and $8. And if I'm full size, I want to be out right away. And another one, also a loss on the day, is ACB. I didn't have a big position, but I did think that we're gonna spike to 1130s, which did happen after I got stopped out. I had a starter position around 1090s. I even added a higher around 1097s, thinking that we're gonna break out above $11 and go to high 1140s, 1150s, but it just didn't happen. I got stopped out for pretty much break even. So today is definitely a day where I got chopped up by a lot of these sideways action. So all the small losses did amount to a red day, and it's the biggest red day of the year. But it's all well within my risk tolerance, and hopefully we get more follow through tomorrow, especially with these wheat stocks and Bitcoin stocks. Hopefully we get some more hype and more gap ups. So time for our Q&A. The first question is from Jiva Daya. I hope I read that right. If that's wrong, I'm sorry. So I can recommend you books on day trading psychology and technical analysis basics, but I do think that in order to get a really good understanding, at least the basics level of understanding for day trading, I don't recommend reading books because all the books are outdated and are written from like 10, 20 years ago. And also, if you're coming into brand new to day trading in 2021, I think you want to know the current market condition. You don't want to read about the market from 5 years ago, right? So I have a day trading playlist for beginners on YouTube. I'll leave them in the link description below, where you can watch some of the beginner's guide to day trading. I have a lot of these, how to get started, beginning, drawing support resistance, risk management, psychology, the difference between small caps and large caps. I've made tons of videos on those, and I'll leave them in the comment section below. I know you're looking for a book. I'll leave some book recommendations below too, but I think those books are great. I think those books are good for like psychology and technical analysis, not necessarily the actual day trading executions and how the market works. So the second question from Eric, it's not really a question, but he's saying that it's easier to trade long term because you can buy in and forget about it for a few months or a few years. I think that's called investing. And I mean, I do invest too, but it's very different from day trading. But I wouldn't call investing trading long term. I would call it investing long term, right? I've done a video on day trading versus investing, all the differences and everything like that. So feel free to check that out. But for beginners new to the markets, you don't want to confuse day trading and investing. They're two very different things. Now the last question from A. Lee. Hi HT, I want to ask you about how to allocate the position sizing for each trade. Let's say you have $100,000. How do you split your funds up each day for each trade that you intend to take? And will you recommend averaging down your position if the stock you bought falls? So to answer your question on position sizing, this is how I personally do it. And this is how I recommend people to do it. But you obviously don't have to follow this. I would risk according to your risk. So let's say with that $100,000, let's say you're comfortable risking $1,000. And on a stock you're trading, that's ACB, let's say you are risking 10 cents. Right, you're risking 10 cents per share, and the max exposure you want to potentially lose is $1,000. So then you would only use, wait, let me do the math, 1,000 divided by 0.1. Right, so your maximum position size is 10,000 shares on a stock like ACB if you're risking 10 cents. So that's how I would do this. But for a stock like Tesla, let's say you have to risk $10 per share, then that means you can only use 100 shares, right? So that's the difference. 100 shares times 10 equals $1,000. So that's how you size into different stock and different positions. You shouldn't be using the same size on a stock like ACB and Tesla. The share sizes wise, it shouldn't be the same thing. So that's how I usually do this. I will allocate share sizes according to your maximum risk. So hopefully that helps you guys out. If you have any more questions, feel free to leave them in the comment section below. If you enjoyed this video, remember to drop a like and subscribe. Thank you guys for watching, and I'll see you guys next time. Hey guys, thanks for watching. I hope you enjoyed the video and the bad jokes. If you want to see more day trading content, make sure to subscribe and follow me on Twitter and Instagram for more. If you'd like to trade with me daily and get my free weekend watch list and trading journal, make sure to check out the links below for more resources. Stay green, stay positive, and I'll see you guys next time.